Hi and welcome back to the Stocks and Shares channel. I've got two stocks here which could potentially be good buys right now. If you enjoy this video then please hit the thumbs up and subscribe to the channel as it will help out in a massive way. Just to disclose that I do own these two stocks in my current Stocks and Shares ISA account, and the following information isn't financial advice, and I would encourage you to do further research if you wish to buy any of these stocks. So let's get straight into it. Stock number one is Money Supermarket Group, who are a financial comparison company and offer a wide variety of services such as loans, mortgages, broadband and insurance. The customer can manipulate the data to suit their needs, and Money Supermarket will then relay this information back in a clear and concise manner, which will allow the end user to view different tariffs and offers and make a decision which will suit them the best. Money Supermarket then make money when the customer takes up a new deal and the provider then pay Money Supermarket a small fee. Attached on screen is the business model, which is easy to understand and most of all very effective. So let's take a look at some of the products that they offer. These are the different products that they compare on their website, and a lot of these industries were deeply affected last year due to COVID, but looking at the macro information, which I'll now go over, a rebound looks like it could be on the cards. We'll then take a look at the financials and the share chart. As Money Supermarket bring in a share of their revenue via car insurance, let's take a look at the annual car registrations across the UK. As can be seen here, last year, year to date, we had 653,502. In comparison to this year, we've got 909,973, and this is broken down into different sections here. What jumps out is the year-over-year annual registrations, as it's up 39.2%, so that's great to see. This chart and information is taken from the UK government website, and it shows the housing starts from 2007, just after the financial disaster, all the way up to 2021. So as you can see, it shows that starts and completions have been on the uptrend, but when COVID happened last year, there was a really steep decline. But this has been a V-shaped recovery, certainly in house completions, and it looks as if it's going to be the same with starts as well. And now these are starting to take off, so that will be beneficial for the likes of mortgages, gas and utility companies, and broadband users, and home insurance, which Money Supermarket all do comparisons on. Another avenue of income for Money Supermarket is pet insurance. This extract taken from the BBC says that 3.2 million households in the UK have acquired pets since the start of the pandemic, which really shows there is a huge demand for household companions. It even goes to say that there was a shortage of some dog and cat food products. Some of the online retailers or companies such as Pets at Home, they've also been performing really well recently. And of course, with the uptick in pets, these pets will need to have insurance, which sets Money Supermarket up in a great place. Here's a quick overview of the financials for Money Supermarket. From 2017 to 2019, earnings and revenue were all going on the correct pattern here, until 2020, where of course we had the COVID-19 pandemic. Now the positive thing about this is that revenue and earnings certainly earnings were still positive, so that's good to see. So going forward now into 2021, it'll be really interesting to see, using the macro information we've just went over, if this will allow the company to increase the revenue and earnings from this point onwards. And this is the last section of this stock overview. Looking at the share chart and other financial information, we've got a PE ratio of 19.8, so it's certainly not cheap, but in comparison to this 5-year chart, it's trading towards the lower end of the 5-year chart, and it's getting towards the initial COVID sell-off, so that leads me to believe that this could be a potential buying opportunity. One of the benefits that you'll get owning this company is that you'll currently get a dividend yield of 4.48%. Now that's been paid out in quite a large percentage here. The adjusted earnings per share is 13.1 based on last year's earnings, and they're paying out an annual payout in the combination of the 8.61 and the 3.10 here, which gives you about an 11 or so. So it's at the very high ends, but hopefully if earnings can pick up over the next year, this should still be fairly safe. And the second stock we've got here is Vodafone Group. Vodafone are a large telecommunications company with a multinational presence, operating fixed lines and wireless connectivity. Over the last few years, their revenue and earnings have been on the downward trend, specifically in 2019, where they recorded 8.2 billion of negative earnings, which resulted in a huge dividend cut and has led to the share price plummeting in recent years. But could a turnaround be on the hands? I think there possibly could be, and we're about to look into some of the most recent details from their financial results. This information is taken from Vodafone's latest full year earnings, and I advise you to go and check it out if you want to look into it further. They operate in a very mature European market, which makes up 77% of their total revenue, and this may prove to be difficult to get year-on-year growth in the high percentages. Africa, on the other hand, is only 16% of their total revenue, and I feel like this is one of the areas that they could focus on to generate future revenue growth. Here we have some of their KPIs, which shows from 2019 up to 2021. Group revenue from 2019 up to 2020, there was an increase, but as with the COVID pandemic, this possibly has affected the 2021 earnings. But let's take a look at some of their customers and see how many members they have. Europe, mobile contract customers, year-on-year growth every year. Broadband customers, year-on-year growth every year. And this seems to be a common theme. Let's check the Africa data users, 75 million up to 84 million. So things look as if they're getting the customers that they require. So it's up to Vodafone now to capitalise on this and see if they can generate the revenue and earnings required. As I touched on just a moment ago, we've got here the percentage of the coverage they've got for Europe and Africa for a 4G population. They're reaching about 98% of the population in Europe, whereas in Africa they're only reaching 62%. So there is a huge scope for growth there. And this has been on the right trend from 42% a few years ago up to 62%. So definitely looks as if this is going to be an area where they're going to be pushing. This section covers the company's medium-term ambitions, which it's got here. They want to focus the growth in both Africa and Europe, and they're wanting to get mid-single-digit adjusted free cash flow growth. So good to see there. And if you're an income investor, this is what section might get you excited, that they've got a minimum dividend here at 9 euro cents, which right now yields about 6% or so. So if you're an income investor, this might be a good shout for you. And we're on the last section of this stock overview. We've got Vodafone's share chart. This is on a 10-year chart just now. And from 2017, it really has been on a downward trend, especially with all the bad news baked in the negative earnings, and especially when they cut the dividend. But it looks as if this might have broken trend line and possibly bottom about the £1 mark. So who knows, this could be it's starting to go on the upward trend. The dividend, as we spoke about in 2018, was cut from 15 cents down to 9 cents. So that was quite a drastic reduction. But looking at if you purchase these, you can still get quite a large yield due to the share price dropping down. So I guess to summarise, Vodafone does have the characteristics to be a good recovery play. And if you've stuck here till the end of the video, I'd really appreciate a thumbs up, and any comments you've got about these stocks or any future videos, I'd love to see in the comment section below. So thanks again, and I'll see you in the next video.